Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Thursday, September 3rd. Firstly to the S&P 500, and here we've had a confirmed change of trend today, a candle making a higher high and a higher low. If you recall, for the previous day's trading, we had the buyers taking control, building solid upside momentum off the support at the highlighted zone down around the 1915 area. This was a potential bullish harami pattern, and we have seen confirmation of that. The problem for the buyers has been the rejection from above the 1968 and 1955 resistance, and the market tested above there but failed to close above there. Closing down between the midpoint level and the lows, suggesting the sellers have taken back control of this market. And also we have the market opening and closing pretty much in the same area. So we have a doji candle, and that's a candle that represents very little upside momentum in net terms between the open and the close, and it suggests that the buyers, where they should have been building that momentum, continuing that momentum from the previous day, they haven't been able to do so, and it does raise doubt about the continuation of the trend to the upside. This large shadow on the top here highlights the loss of commitment by the buyers above these resistance areas. Now, if we do see any change of trend for the next day's trading, we'll be looking to support coming in around this 1925 level. We have the Kijun-sen trading just above there, and we should also be watching this zone from a previous time extending roughly down to about the 1915 area, and then down below there the round number 1900. Now, just looking at our Fibonacci extension or Fibonacci projection tool, and we're examining the relationship of this new first time frame uptrend to the immediate previous first time frame uptrend. And here we saw the market testing through the 38.2% level, through the 50% level, losing commitment up there from the buyers, and the buyers unable to close up above each of those levels. It sets the market up for a change of trend back to the downside. Also the Fibonacci Retracement tool, and we're examining the relationship of the first time frame uptrend to the immediate previous downtrend, and here we saw the market testing through the 61.8% level exactly to the 78.6% level, being rejected from both those levels, suggesting a possibility of a change of trend. Next to the Dow 30, and here we see confirmed change of trend with this market again today, as we saw with the S&P 500, and previous similar type of candle, a bullish harami, the buyers in closing with control for the previous day. Today the strong price rejection from the resistance at the Kijun-sen indicator, so slightly different here. The Kijun-sen holding as resistance, as did the area close to 16588. The sellers taking control in this candle, a very small body again, not quite a doji candle, a little bit of upside momentum, but the loss of upside momentum by the buyers suggests that there is a very real possibility of a change of trend to the downside here. Support coming in at 16312, so that's an area we should be watching for that change of trend, and we have very strong support down below that area at 16174 and down around 16015, with the Tenkan-sen trading around that region. In terms of Ichimoku, we are still trading a fair way away from the Ichimoku cloud. We have a bearish bias in the longer term time frame as well as the medium term time frame by trading below the Kijun-sen, and any selling that comes in this market would be in line with those higher time frame trends, and there would be a potential for the market to breach down through the 16015 level if the sellers can build momentum for the next day's trading. Next to the Nasdaq 100, and a very different type of candle here with this market, a black body candle. So whereas previously we had a white body candle in an uptrend for the previous day, the buyers were building momentum, they closed with control, and all of that has switched around for today's trading. Even though we are still in an uptrend, we have a black body candle, so the sellers have built momentum to the downside in net terms between the open and the close. The sellers have closed with control, and the buyers lost commitment up at these higher levels of resistance. And if you recall, yesterday we were watching these levels very closely as they were formed quite close together, and the amount of resistance, because they were quite close, was likely to be strong, and with the rejection from there we've seen the market close lower. We also saw the window that was opened up about 4 or 5 days ago closed, but importantly, the market failed to close above there. So it's we traded through there, but the close of price action today couldn't finish up above that region. So it may continue to hold as resistance in the near future. Certainly not as strong because we've traded through there, but still may have an effect if we do see some buying coming into the market. Now, if you do see a change of trend, and there's a good likelihood of this occurring with the sellers taking control of this market, looking to the Kijun-sen around 4208 to hold as strong support, and then down to about the 4179 area. Any potential rally may continue to find strong resistance up to about this 4306 region. Looking at trending price action, we are still negative in the longer term time frame, trading below the Ichimoku cloud, but trading just above the Kijun-sen, so we still have technically just a bullish market in the medium term time frame and still a bullish market in the short term time frame. We're trading above the Tenkan-sen here. So the pink line here is the Kijun-sen, it represents a medium term time frame, and the green line here is the Tenkan-sen, it represents the short term time frame. Let's just take a quick look at some stocks, and firstly Nike, NKE is the code, and here we see a market that's trading up above each of the Ichimoku indicators. For the prior week's trading, we saw the market trade significantly lower, as we saw with a lot of other stocks, and then it was able to close up above each of the Ichimoku indicators to give us a bullish market by the end of last week. This week's trading has been a little bit indecisive, a much smaller range, a black body candle, but the market is tending to close up towards the highs for this week. So that week hasn't finished trading yet, but looking at the relative strength comparative, strongly outperforming the overall market. Momentum of relative strength is trending up and well up above 100%. Looking at volatility, however, volatility is starting to come off, and that reflected this pullback that we saw. So what we want to see here is the stock on a weekly basis to take out at least the high of the previous week, which is at $113. To the daily charts with Nike, and here we see the market attempting to rally back up through the Ichimoku cloud. About a week or so ago, we saw the market break out through the top of the cloud after that very strong sell-off, but we didn't see any strong follow-through. So that does raise some doubt about the strength of the buyers in this market. We saw formation of a doji candle, the market to trade back within the cloud, finding support at the bottom, and now we've been able to rally up to the top of the cloud, and we've seen some rejection there. So that's going to be the benchmark for this market tomorrow. Roughly about the 111.73, 112 region is where the cloud may continue to offer resistance. If we see a strong bullish breakout, we could see the trend develop further to the upside, bearing in mind a few areas of resistance up above, around this $116 level. But at the moment here, we do see a zone of support extending from about 111 up to about 112.75. In terms of relative strength, strongly outperforming the overall market, even though we are finding some resistance at the top of the cloud. Nike is still outperforming the overall market, the S&P 500, trading outside of that upper band, and momentum of that relative strength is not as strong as we'd like to see, not trading up above that upper band, so raising some doubt about whether we will see that breakout to the upside. Looking at volatility here, it's coming off, it's plateaued, and that reflects this retracement here, and then the formation of congestion here within the cloud and just around the top of the cloud. Moving next to Facebook, FB is the code, and here we saw a similar type of trading activity as we saw with Nike, with the market selling off for the previous week. A downtrend had begun prior to that, so there was a warning here for this pullback. The market breached down through each of the Ichimoku indicators on the weekly charts and found strong support within the cloud, bouncing off there. For this week, we've seen some selling coming in, with the Tenkan-sen holding as resistance, but in terms of relative strength, strongly outperforming the overall market. Momentum of relative strength is no longer outperforming, it's no longer a strong uptrend, but it still is up above 100%, so some doubt about whether we are going to see the market break out up above and continue higher. On the daily chart, after the market sold off down through the Ichimoku cloud, we saw the market attempt to rally and found resistance very close to the top of the cloud and then sold off once again. A little bit different than we saw with Nike, where Nike actually sold out through the cloud and then began to trend down. This market has actually moved down below the cloud, attempted to find attempted to trade back higher, found resistance within the cloud, and today once again sold off to close down below the cloud on a bearish candle. Relative strength has been very weak compared to the overall market, compared to the S&P 500 on a daily basis, and just a couple of times in the last week or so we've seen a weak outperformance, just moving up above the upper band, but unable to sustain the relative strength comparative above that upper band. If you look at momentum of that relative strength, it's actually moving down. It's very close to the lower band and may move down, and we could see some potential underperformance if we see the market take out the lows here and trade lower off the back of this strong selling from the Ichimoku cloud resistance. Looking to the Kijun-sen indicator at 85.37 to hold a strong support if we do see the market sell off. But if we breach down through there, we could start to see some very strong underperformance by Facebook. Looking next to Sprint Nextel, XS is the code, and here we saw the market rallying on a weekly chart over the last month or so, finding resistance at the top of the cloud for last week's trading, bouncing off support just under the Tenkan-sen and the Kijun-sen indicator, as we'd expect to see, and it highlights that there was a strong bullish bias in the medium and fast term timeframes. The market, however, has found resistance around the bottom of the cloud, and for this week we're seeing some indecision enter the market. Strong underperformance prior to the last couple of weeks, and now just starting to strongly outperform, and momentum of relative strength is starting to move higher. On a daily basis, we see a market that's trading up above each of the Ichimoku indicators, so a market that's bullish in all three timeframes, and just looking a little overdone in the depth away from the Tenkan-sen and the Kijun-sen here, and the market has been retracing to a degree, but we've seen this retracement on fairly weak small-bodied candles, and that says something about the lack of strength of the sellers in this market, and I suggest that if we do see some buying coming into this market, we could see this second time frame uptrend continue along its way. Relative strength comparative has been very, very strong, and we're still up around that upper band, even though we've seen some weak candles over the last few days. If we see this relative strength move back to within the bands, and that would probably entail the market taking out the support around these lows, around the 490 region, and if we see the market come back to the Tenkan-sen, we could see that relative strength start to come off. If we do see a retracement, the Tenkan-sen 463 should hold as very strong support, and looking at the relative strength momentum here, that's still quite strong. It's just around that upper band. One thing to watch for here is that volatility is actually coming off, and that does suggest that we may have seen an end to this very strong uptrend here, and we are seeing the market pull back. So if we see the market take out that area there, then that would really be considered as the end of that strong uptrend. We could see the market congest also, but this volatility here coming off suggests that the uptrending action that we saw previously may not continue. We could see, if the market is able to take out the highs here and trend higher, that volatility turn around and start to trend up, but at the moment there's no evidence of that.